So I do have my trusty assistant JB behind the scenes. If you can just do a quick mortgage payment for me for the current and for the future, that would be awesome. So what I'm going to be doing here, I want to know, am I going to cash flow? So my current revenue stream was, I'll just round it, $3,200. My property, that's per month, by the way. My property tax, insurance, mortgage payment. This is your pity party. This is your principal, interest, taxes, and insurance. If you can't cover this, you're never going to cash flow. So the current situation is this. My property taxes are approximately $200 per month. My insurance is going to sit at approximately $250 per month. And my mortgage will be, it'll be approximately $1,300. What's the exact number you got? 13? Approximately $1,300 based on current mortgage rates. So if we look at that, what am I actually cash flowing at? So my total expenses are going to be $1,750. So my net operating income, and there are other expenses, but my just base net operating income is going to be sitting at about $1,450 per month, somewhere in that range. So when I looked at this, I go, as the building stands, it cash flows very nicely. So it really tweaked my interest, because if I want to just let this building run as it is, it cash flows. The building's a little ugly. The suites aren't very nice. They're not horrible, but there's certainly room for improvement. And the other thing is there's a lot of room for improvement on the rents to increase the revenue stream. One of the other things that really interested me about this property is there's also availability of additional revenue for parking and laundry. They're not huge amounts of money, but they certainly do help to pad your revenue stream just to be able to improve this to a really satisfactory perspective. So these were nice little bonuses that I will be taking advantage of. So now, what about the future? What about the future perspective on this one? What is fair market rent? Now that's going to vary dramatically depending on which part of the city you're actually located in. But in this area, it's a good area that's certainly on the upward trend. So what is fair market rent? Well, I have two bedroom units and two one-bedroom units. The 2-bedroom units should be, right now I'm getting $1,900 for the 2 of them, and they should be at approximately, according to the provincial numbers, should be at about $1,100 each. So I should be getting about $2,300 for those 2 units. The 2 one-bedroom units, if I use the base provincial number, right now I'm only getting, about $1,330 for those 2 units. I should be at about $1,700. $850 per unit is a base number for the province. So this changes my revenue number dramatically. Plus, if I want to add in parking, there are 3 parking spots which should be rented at about $70 per month. And laundry generally equates to somewhere in the range of about $60 per month on a 4-unit building. So now if I start to look at this, my numbers have changed dramatically. So my total revenue stream here is, I've increased it by about $1,000 a month. That's after a fully renovated building and the rents are all reset. So if I want to do those same numbers again, my taxes likely aren't really going to change, even if I say they're going to increase slightly. Let's call it $250. My insurance is going to remain the same at $250, and my mortgage payment is likely going to go up by probably $200 to $250 a month. Right now the interest rates are so ridiculously low. So even if I factor in a bonus on it that it's going to be quite a bit more, and I say it's going to be $1,600, this is now turned into a really nice cash flowing property. As we're at $2,100 on the cost, which is about half of what my actual revenue stream is. And it's going to be, obviously there's going to be other things. There's going to be maintenance costs. There's going to be, might be some management costs. And then there's always miscellaneous things that jump up and bite you. I know there's a license fee with the city of Winnipeg. There's fire inspections. There's a list of things. At the end of the day, this property will cash flow approximately, after I did my numbers, it's going to cash flow about $1,300 after I factor in vacancy and all those other things. So if I know it's going to be at $1,300 a month, and I'm looking at what is my cash on cash return after I have actually done all of the renovations and I've got my refinancing done and I'm only left with $20,000 left in the property. I'm going to be, so my cash flow for the year is going to be $15,600. And I'm going to divide that by 20,000 to get my cash on cash return. JB's just working out the number. My annual ROI after I've done the BRRRR strategy is 78% cash on cash return. This is why I like the BRRRR strategy. It's useful. It may take a little bit of time to work out all the details on it. This is not going to happen in a week. It's not a quick flip that you're going to generate this in 3 months. But in terms of a long-term great foundation of a strategy to develop a great real estate portfolio, this is why I like the BRRRR strategy. I have yet to find anything that's going to generate this level of ROI long haul and continue to do that for me year over year. So if this is something that is of great interest to you, reach out to me. Had my contact information at the beginning of the video, had all of the email address, my phone number. Feel free to reach out. We're going to be doing a series of videos to kind of take you through this entire project for myself so that you can see how I do this. It's going to take a while to do that. My possession date for the property that's coming up is actually June 5th. I will do a couple of additional videos before that, and then we're going to walk you through the entire thing as I live it. So you'll be able to see live what is actually happening within a BRRRR strategy. Thanks for tuning in, and I hope to see you again.